What happens when a crypto project tries to be both a lightning-fast blockchain and a decentralized supercomputer for artificial intelligence? That's Qubic. It promises instant Feeless transactions while using its mining power to train an on-chain AI. Ambitious? Absolutely. Overhyped? Let's find out. This is not financial, tax, or legal advice. Always do your own research and never invest more than you can afford to lose. By the end of this video, we'll rate Qubic out of 100 based on tech, adoption, risks, and more. Team and development. Qubic was founded by Sergey Ivancheglo, better known as Come From Beyond, the same mind who created NXT and co-founded IOTA. The project is fully open source and community-driven, with code on GitHub and frequent updates. A big strength is how the community actually votes on changes, including major ones like Tokenomics. But the team's style is controversial. They lean into bold stunts, big promises, and attention-grabbing moves that polarize opinion. Some see it as visionary leadership, others as unnecessary theatrics. And let's be honest, with two past projects that started with big ideas but never quite fulfilled their early hype, it's fair to wonder, will Qubic finally deliver, or are we watching a third ambitious experiment that could fizzle out just like the last two, leaving investors burned while the creators walk away with the gains? Either way, development so far has been fast and transparent. Score 6 out of 10. Tokenomics. This is where Quibic's story gets interesting. At launch, 1 trillion tokens were being emitted every week, aiming to spread supply widely. That would have meant a total of 1,000 trillion tokens over 19 years. But in 2024, the community voted to slash that cap down to 200 trillion and add Bitcoin-style halvings. The first halving happened in August 2025, cutting net emissions roughly in half from around 900 billion tokens per week into the 400 billion range. On top of that, every time a smart contract runs or a commission is taken, a portion of tokens is burned forever, shrinking supply as usage grows. The upside is flexibility and fairness, no premin, no ICO, no VC stash. The downside is that even after reductions, supply is massive, and it takes real adoption to keep price stable. Score 6 out of 10. Use case and utility. The idea is powerful. A chain where sending money costs nothing and settles instantly, while the same system puts all that computing power to work, training a decentralized AI called AI Garth. The Qubic token is required to run smart contracts, access oracles, and perform computations. That means the more the network is used, the more demand for the token. The catch is adoption. If developers build real-world apps, payments, games, supply chain tools, Qubic's utility could shine. If not, the horsepower risks being wasted. Score 6 out of 10. Hype versus fundamentals. Qubic is known for flashy moves. In 2025, the community coordinated a 51% takeover of Monero's network and later voted to target Dogecoin, branding these as educational experiments. It grabbed headlines, but also criticism from those who saw it as a publicity stunt. That's the hype. On the fundamentals side, Qubic has already proven technical milestones: record-breaking transaction throughput, a unique quorum consensus with instant finality, and on-chain governance that changed tokenomics without a fork. So, is it more hype or more substance? Right now, it's a mix. The fundamentals are real, but the marketing sometimes overshadows them. Score 6 out of 10. Market liquidity and volatility. Qubic trades on international exchanges like MEXC and Gate.io with a few $1 million in daily volume. That's decent liquidity for a mid-cap, but it's not listed on major US exchanges, which limits access and institutional interest. Volatility is high, prices have swung 70% in weeks following big announcements. For traders, that's excitement. For holders, it's risk. Score 4 out of 10. Security and decentralization. Qubic isn't proof of stake. It runs on what the team calls useful proof of work. In traditional proof of work, like Bitcoins, miners perform massive computations to find a valid hash. Those calculations secure the network and keep it decentralized, and miners are rewarded with new coins and fees for providing that security. Qubic follows the same principle of rewarding miners, but with a twist. The computational work also trains its on-chain AI, called AI Garth. So while Bitcoin's work focuses solely on network security and reward, Qubic's work aims to secure the chain and produce valuable AI training at the same time. The highest performing miners earn spots as validators, known as computers, and at least 2/3 of these 676 validators must agree to finalize transactions. This makes a classic 51% attack far harder, since an attacker would need overwhelming computing power and control over most of those top nodes. What some see as a trade-off is that the validator set is fixed in size, so decentralization relies on constant rotation to keep control spread out. To date, no successful attack on Qubic itself has been reported. Score, 10 out of 10. Network activity and adoption. The community is big with over 150,000 members, and smart contract launches have already burned trillions of tokens. There's a grants program with dozens of projects applying, and mining activity has been huge, enough to briefly dominate Monero's hash rate. But what's missing is a killer app that draws in non-crypto users. Until then, adoption is mostly within the crypto crowd itself. Score, 6 out of 10. Scalability and technology. As mentioned, this is Qubic's biggest bragging right. Certified tests showed 15 million transactions per second, and later trials hit over 50 million. Transactions settle instantly with true finality, and because transfers are feeless, there's no gas bidding or congestion. Contracts run close to the metal in C++ for raw speed. The trade-off is complexity. Building safe apps on this kind of architecture isn't as easy as using Solidity on Ethereum. But if builders catch up, Qubic's tech is some of the fastest in the industry. Score, 9 out of 10. Regulatory risks. Qubic avoids some of the biggest risks. No ICO, no Premin, no central company promising profits. It launched more like Bitcoin through mining. That makes it less likely to be flagged as a security in the US. The project even states openly it doesn't offer securities. Still, regulators are paying more attention to both crypto and AI, and because Qubic offers feeless, untraceable style transfers, some exchanges might treat it like a privacy coin, limiting listings in stricter regions. Score, 8 out of 10. Self-custody. You never have to leave Qubic on an exchange. There are official mobile and web wallets, plus community-built desktop apps that let you hold your own keys. If you want true cold storage, that means keeping your private keys completely offline. You can create a wallet on a computer that never connects to the internet, write down or engrave the recovery phrase on metal, and store it in a safe place. This way, your keys stay protected even if your phone or laptop is hacked. At CryptoVagabonds Academy, we teach exactly how to set up and safeguard wallets like this, step by step, so you stay in full control of your coins without relying on any third party. Remember, when you self-custody, you alone are responsible for your recovery phrase, lose it, and no one can restore your funds. Score, 10 out of 10. Final thoughts? Qubic is one of the boldest experiments in crypto right now. Part high-speed blockchain, part decentralized AI engine. It has real innovation under the hood, but also a flair for spectacle that can distract from the fundamentals. If the ecosystem delivers real applications and adoption grows, Qubic could stand out as one of the most unique networks in the space. If not, it risks being remembered more for stunts than for substance. Final score, 71 out of 100. So what do you think? Is Qubic a breakthrough project blending AI and blockchain, or just a flashy experiment? Let us know in the comments, and while you're there, drop the name of another project you'd like us to analyze next. We might even pick your suggestion for an upcoming video. Don't forget to like, subscribe, and share this video with someone who can benefit from it. And as always, stay curious and stay hodling.